dropped below and kissed close to $60,000. So initially it was reported that this had to do with somebody blowing up. And in fact, somebody might have blown up, but it's not a crypto person that's blown up. Now, because we have the Bitcoin spot ETFs and we have TradFi really entering into the crypto markets, things are going to get a lot different than where they were before. We're going to see volatility that we haven't seen before. We're going to see manipulation that we haven't seen before. If you thought crypto was manipulated prior to institutions coming in, yeah, the stream is going to blow your mind. And again, I just did a bunch of research this morning. I'm going to try to articulate it to you the best way I can because it's incredibly complex. And I've got a lot of notes that I'm going to be reading from, because when we talk about the traditional markets being a scam and being derivatives on derivatives on derivatives on derivatives on derivatives and just paper money floating back and forth, that's exactly what it is. And a lot of this stuff is not only incredibly complicated, they don't teach it in public schools, and it's very, 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 very hard to understand because they have so many different terms for so many different things. So initially, we thought that, the mistake from Bithumb, apparently Bithumb had a little airdrop that they were doing to their customers. It's a Korean-based exchange where they were going to give $1.50. Instead, it was they sent out 1.5 Bitcoin, which attributed to about 2,000 Bitcoin that was sent out. And allegedly, there was reports floating around that their customers had dumped it. But in fact, that wasn't really the case. It was actually reported that Binance was able to help recover some of the Bitcoin, not all of it, just a teeny tiny bit. But Bithumb recovered about 99.7% of the 2,000 Bitcoin that was mistakenly sent out. So that wouldn't have had that much of an impact on the market. Now, the BlackRock IBIT spot ETF, that's what could have done it. And that also could have dropped Bitcoin on October 10th of 2025, because there's a little bit of information on that as well. So we'll get into that. But as far as IBIT goes, IBIT had one of the biggest volume days ever when we saw that really nasty drop from Bitcoin to all the way down to $60,000, that nasty 30% drop. They had about 10 billion volume, which we talked about, and 434 billion in outflows, and IBIT accounted for 175 billion in outflows, which is a lot. Either way, BlackRock is still making money. BlackRock's not losing anything because they are the issuers of the ETF. When we're talking about an ETF, it's basically just like an IOU, all right? Now, with that being said, this is where it's going to get really, really complicated. Arthur Hayes put out a post indicating that it has to do with BlackRock and Morgan Stanley and whatnot. And you also have to understand that a lot of these institutions, they are, it's a big circle jerk. They're in each other's pockets. They're invested in each other. They're shareholders and whatnot, and they all work together. So we're talking about like a multi-trillion-dollar industry, trillions and trillions and trillions and trillions and trillions of dollars that are now interested in crypto, except that money's not coming into crypto yet. It's kind of, we're there, but we're not there. It's really, really complicated. And again, a lot of these big players will end up coming in. Also, make sure you guys smash a like and share this, push this out, because I want to love people to watch this. I want you guys to fact check me. I want you to practice self-education. If you need to use Google, you got to use AI, whatever it is. But let's go ahead and talk about what Arthur Hayes has said. And if this ends up being true, then this could have potentially caused the big drop that we saw on October 10th of 2025, the massive liquidation event, the largest liquidation event in history. So, and again, I'm not spending my time doing a lot of trading. I'm really focused on the Super Bowl game this weekend. Pats versus Seahawks. Seahawks are going to win. I've already placed my trades on OG markets, and I'm super excited. I think I'm going to do well. I'm going to put out a video, guys, for that. But let's get into what's going on. So, crypto funds recorded 1.5 billion in net outflows in the week ending Wednesday, the most since November. This marks the second consecutive weekly withdrawal, and the fifth over the last 7 weeks. So they're talking about money leaving the market, okay? That's what's happening, because remember, we also have a lot of DATs. That is going to impact the market, but not necessarily as much as this. And remember, a lot of crypto, or a lot of Web 2 companies, traditional companies, they have followed MicroStrategy's lead, and they have added Bitcoin to their Bitcoin or various digital assets to their treasuries, to their balance sheets and whatnot. If it's Bitcoin, I don't really have a problem with it. If it's crypto, I don't have a problem with it either if they're actually going to incorporate that crypto into their business model. But a lot of these guys were buying the top and they got absolutely wrecked, and they might have to take big losses. And I'm going to say hi to the channel members in a second, but let me cook. This is a lot of information and it's complicated. So I went ahead and I got a long thing that I'm going to be reading to you because it's incredibly complicated, and I'm still learning about what a lot of this is, because again, these are these are different terms that they're using in traditional finance that we're just really don't pay attention to or not aware of because we're not part of the hedge funds, we're not accredited investors and whatnot. So Arthur Hayes, who is the BitMEX guy, the co-founder, he attributes a recent Bitcoin drop from 105,000 to around 75,000 to dealer hedging triggered by structured notes linked to iShares Bitcoin Trust ETF, IBIT. And there's a Morgan Stanley document that he has in his original post. Okay, the Morgan Stanley document for a dual directional auto callable note issued in October of 2025 with a maturity in 2027. So if in fact this is accurate, this could have potentially attributed to some of the volatility that we saw in October 10th, 2025. All right. Now, these notes include a 75% knock-in barrier at approximately 78,700, where breaching it forces dealers to sell Bitcoin to hedge downside risk. This amplifies volatility through negative gamma effects rather than traditional perpetual futures liquidation. So now we're talking about adding math in here, a lot of math. And I took lots of calculus courses, I took lots of math classes, all kinds of stuff, all right? So there's that. This is where it gets a little bit tricky. While Hayes plans to compile bank-issued notes to match future trigger points, skeptics in replies argue such products remain minor to overall price formation compared to Bitcoin's 4-year cycle. So basically, they're comparing Bitcoin's previous 4-year cycles to this event that happened because of the notes and the ETFs and whatnot, to BlackRock and Morgan Stanley institutions, okay? And at the end of the day, these institutions are the ones that are profiting because they're the ones that are issuing out the notes and the options and whatnot. They're making money on this. They collect fees on this. And again, Bitcoin is still a really volatile asset. And you also have to understand when Bitcoin drops, crypto is not decoupled from Bitcoin, so crypto will drop as well. And that's what we're seeing happen to a lot of different altcoins. So it might not be a crypto issue. This might just be a TradFi issue. And it might be something that we're going to continue to see or continue to experience happen until Bitcoin and crypto are decoupled from each other. They don't follow each other's lead. Well, they follow that. Even XRP, Ethereum, Solana, it all follows Bitcoin's lead for the most part. Make sure to smash lights. Now, while Hayes plans to compile bank-issued notes to map future trigger points, skeptics argue such products remain minor to overall price formation compared to Bitcoin's 4-year cycles, highlighting a shift towards institutional mechanics in crypto. So if you do not have a little bit of knowledge about how traditional markets work, trading crypto and investing in crypto will get a little harder. So this is why we're talking about this. This is why we're learning this together. Go Hawks. And I'm trading on OG markets. Anyways, gamma is hedging the process. Let's explain what gamma is now. Gamma is hedging the process of dynamically adjusting positions, usually the underlying asset like stocks, futures, or in this case, Bitcoin, to offset changes in an option or structured product's delta as the underlying price moves. It addresses the limitation of simple delta hedging, which only works perfectly for tiny price changes, but Bitcoin is volatile. So when Bitcoin gets these massive swings, it throws everybody off. So how does this play out? Let's talk about it. It plays out in structured notes, example, Bitcoin IBIT linked products. Many structured notes, auto callables, principal protected notes, etc., contain embedded options with barriers, knockouts and knock-ins, or payoffs that create negative gamma for the issuing of bank dealer. Really, really funny how they use the term dealer because that's also what's used in a casino. But again, TradFi investing is not a scam, right? TradFi investing is completely safe, right? Typical example from recent Bitcoin structured products, a note might offer upside participation, but with a knock-in put barrier at approximately 70% of initial level, 78,700 when Bitcoin was higher. If Bitcoin falls and breaches the barrier, the note payoff becomes more put-like. The dealer's effective position gains negative delta rapidly. To stay delta neutral, the dealer must sell Bitcoin futures as price falls. But because of negative gamma, the more Bitcoin falls, the faster delta becomes positive, forcing even more selling. So it just caused more volatility and it causes more downside. That's why we saw that really, really crazy drop. And then we essentially kind of rebounded because it sounds like they were done for the most part. I don't know. Maybe that's what it's sounding like to me. Because again, remember, after we had that really, really gnarly dump all the way down to almost $60,000, we broke below the EMA weekly 200. everything was down, Bitcoin, XRP, Ethereum, Solana, a lot of the top cryptos, they got a nice little rebound. We almost wiped out all of the daily losses, or we gained price and momentum from the drop. Joe. All right, because of negative gamma, the more Bitcoin falls, the faster delta becomes positive, forcing even more selling. This creates accelerating downside pressure, negative feedback loop. The result, a breach of key barrier can turn a dealer into a potential stabilizer or turn a dealer from a potential stabilizer into a forced large seller, exaggerating the drop. Exactly the mechanic Arthur Hayes highlighted in his post from the move from 105,000 down to 70,000, and he says this started from October 2025. So if that's the case, this also has to do with the great liquidation event that we saw. Shout out to Brooklyn. So that's what's happening in the markets. All right, that's what's happening in the markets. It's crazy. I don't understand half of what was said. That's why I wanted to read it out to you guys. We will still see volatility. It sounds like Bitcoin is still in the 4-year cycle, but the volatility we're seeing because the institutions have entered has been a lot bigger, or it feels faster, it feels harder, it feels more exaggerated. But at the same time, if this is happening when price is bearish, then I'm wondering if when we do get that reversal and we get back into a crazy bull market, if we're going to get volatile gains like we're seeing volatile losses. And that's what I want to leave you guys with, is that idea. So this is allegedly what happened. And we don't know, we're going to get a lot more information out. But it's pretty interesting stuff. So if this continues to happen, crypto's going to get a lot more interesting. So this is the information that I've compiled online. I used AI to help me figure this out. Also, shout out to crypto.com for also acquiring, I want to say it was AI.com as well. Which again, AI and crypto, DeFi and RWAs is going to be big in the future in privacy. But big shout out to our channel members. Shout out to Dale. Shout out to Lawrence. Shout out to Lawrence for the $10 super chat. And I ate some Taco Bell yesterday. Me and Lo, we partied. Shout out to Gumby, to Cherry, to MJ Guzman, to Gumby again, to Mr. R. Oh, yeah, there's a UBS story yesterday. To John Legend. Yeah, MJ Guzman and Gumby, and then someone said they were from Ireland. So yeah, and the cool thing about having AI now is that AI is going to be able to help us track all of this. So anyways, there's that. Also too, really quickly, AI.com was acquired by it looks like crypto.com, which again, so anyways, you guys, sending y'all love and light. I got a video coming for you about Ripple XRP and the institutions. Shout out to John Germain, coming at 2 p.m. PT, so watch that. And I hope this helps. Please share this. Bye, babies. Go Hawks.